I'm Paul Groh, manager of the Estates Administration Department at the law offices of Daniel Hunt. Today, I'm going to share 3 simple steps to keeping records as a trustee of a trust. This is important because as a trustee, you'll need to account to the trust beneficiaries for all money that came into and went out of the trust. At the end of the accounting, if the money doesn't add up, you may be required to reimburse the trust for those funds out of your own pocket, out of your trustee fee, or out of your beneficial share of the estate. We want to help you avoid that. Step 1. Collect financial statements. First, obtain a statement from each financial institution to find the starting balance for each account. If you are a successor trustee over a trust where the settlor has died, you will use the account balance on the date of the settlor's death as the starting balance. If you are taking over as acting trustee for a trust where the settlor has resigned or been declared incapacitated, you will use the date of your appointment in that role as the starting balance. Step 2. Create a ledger. There are 3 main options when it comes to creating a ledger. Whether you use a handwritten ledger, a paid accounting software program such as QuickBooks, or a simple spreadsheet system such as Microsoft Excel, the method doesn't matter too much if it works for you. But you may want to check with the estate planning firm who will be preparing the trust accounting and inquire as to their preference before you begin. Step 3. Keep scrupulous records of all transactions. A trustee must keep careful records of all transfers of money and property into or out of the trust. Your records must account for the nature and value of the trust assets when received, how much principal and income the trust has received and from where, how much principal and income has been dispersed and to whom, any commissions paid, the amount and location of any balance on hand, and finally, expenditures, gains, or losses of the trust. Be sure to keep your personal funds separate from the trust's funds. Never commingle the two as trustee to avoid confusing your records and the appearance of stealing money from the trust. You'll want to keep copies of any relevant vouchers, receipts, and other documentation or disbursements, expenses, and capital transactions. If a beneficiary ever raises questions about the accounting, this evidence will come in handy. How long should you keep these records? When you file the final tax return, ask the CPA who assists you for advice on how long to keep trust administration records. Before throwing out any paperwork, you'll want to be sure that the IRS won't be auditing the fiduciary returns. Usually 3 years is sufficient, but a period of up to 7 years may be advised. We hope these tips will help you avoid what happened to one of our clients, who I'll call John White. John failed to keep accurate records while acting as a trustee. At the end of the accounting year, he tried to piece together what had happened to the trust funds. But the numbers in his accounting did not add up properly. Because of the discrepancy in trust funds, John had to reimburse the trust over $30,000 of his own trustee fee and beneficial share. Mistakes like this can be avoided with scrupulous record keeping. For detailed counsel on how to keep accurate records as a trustee and limit your potential for getting sued by a beneficiary, feel free to contact us to schedule a consultation with a trust attorney. We hope this video has been helpful, and if you have any questions about estate administration, feel free to contact the law offices of Daniel Hunt using the information listed below. Thanks.